Shares of Merck are getting crushed today, on pace for their worst day since 2021. Despite posting a top and bottom line beat last quarter, guidance the issue. The company saying it's going to temporarily halt shipments of Gardasil vaccine to China after lower demand there. Joining us now is Guggenheim Securities biopharmaceutical analyst Vamil Divan. Vamil, welcome. And this is, I think, not something a lot of people had on their radars, which explains the stock reaction. Why is there very little demand in China for this vaccine?
Yeah, so it's been a problem for a few months now. Back in the second quarter call in July, they mentioned they're seeing a slowdown and a buildup of inventory. And then again on the third quarter call, and now again today. And some of it ties to the macroeconomy there and just the discretionary spending. A lot of the vaccine spending there would be out of pocket, and people are just not, comfortable spending right now on this vaccine. We've seen that with other companies and other sectors as well. So that's definitely a big part. There is some additional competition there as well. And then a little bit of some concerns around just the value of the vaccine. It's not being communicated properly in China. So a range of factors, but ultimately just not enough demand. Inventory is building up. And so, they're halting the shipments. And it's a problem. Again, it's sort of driven the stock from 120 down in stepwise fashion to where it is today. But I think at least that sort of sets a floor probably now that they've really sort of stripped it out. They're not shipping anymore. And now people can focus, hopefully, on the rest of the business, which does have some positives that are being offset by Gardasil right now.
So, and some other analysts have said, look, overarching this is kind of like that compounds the existing problem, which is what happens with Keytruda in coming years. So kind of, what is the bigger picture? How can Merck kind of show the community that it has exciting growth again?
Yeah, so that was even before Gardasil started. Their biggest product, Keytruda, for oncology, $30 billion product, is going to lose patent protection in 2028. And the price for that product is going to come down. We know that's going to happen. So they already had this issue to deal with. Gardasil was one of the big drivers to get them through that issue. Now that that's slowed down or really sort of stopped growing, they need to replace that. They need other assets. There's some stuff in the pipeline that's attractive. They do have a new product that they launched last year called Winrevair, which is attractive also. And it's tracking to be probably a $5-6 billion product, but they need more. And I think that's why those questions on the call. And I think regularly they're getting asked questions now that whether it's internally or buying external assets, they need to give investors more comfort that they can grow later in the decade because Keytruda is going and Gardasil, the number 2 most important products, having issues. So we need a couple more products probably to offset the issues that they're facing now.